Welcome to Striking Option, the show that reveals the options you have to better navigate markets. I'm Jeff Kilburn, and I'm joined today by Scott Bauer. Hey there, Scott.
Jeff, how are you?
I'm doing great. It's really interesting, the momentum still intact in the S&P 500, despite the fact that coronavirus. We've seen the coronavirus conversation, that headwind, pick up a little bit in the last 24 hours, but here we are in earnings season. And earnings season, by and large, is a little bit better than expected. What are your thoughts on this earnings season?
Well, you know, we had some earnings expectations lowered a little bit coming into the season, but nonetheless, overall, top and bottom line, we've seen some beats here, and it is one of the first times in maybe 4 quarters or so that we may see some upward earnings.
Yes, it's kind of refreshing. What do you attribute that to? Is that due to the fact that the forward guidance in the wake of the Phase 1 deal being implemented? Is that why we're seeing a little pickup in earnings, potentially positive earnings season?
Well, if you would have asked me that a couple weeks ago, I would have said yes. However, the fears over the coronavirus and how that may impact not just the economy overseas, but potentially the economy here in the United States, that may affect things a little bit as well.
Yeah, and I know Fed Chairman Powell this week was talking about potential material change in their outlook due to the coronavirus. They're not having a material change as of yet, but it'll be interesting to see how this coronavirus develops.
Absolutely.
All right, let's get this first lightning round, pal. You ready?
Absolutely. Let's do it.
Gold. Well, we've seen the shiny gold has been a slow bid higher. Here we are once again. We're seeing a little bit of a grab for that safe haven. We're seeing the 10-year yield lower. We're also seeing a little bit of a bid in gold. So as we knock on $1,600, what's your thought process?
You know, like you said, slow grind higher. When we had a little bit of a sell-off, it really held at some nice support down in the lower 1500s. So what I'm looking to do here is sell the February week 4 1550, 1525 put spread, and the selling of this put spread allows an investor to collect $180.
No, that makes a lot of sense. It's going to expire on February 28th. The April futures is the underlying future contract here. And in gold, it was trading around 1581. So here we are, just about $30 lower, selling a put spread. That makes a lot of sense as we're kind of still in a little bit of a range.
Absolutely. And, you know, 2 weeks to go or so on this put spread. Volatility at the money is 9.5-ish. So, you know, some decent premium there.
All right. Please remember these are trade examples, not trade recommendations. Let's move into the second lightning round.
All right.
Earnings season. Well, you hit the nail on the head earlier. A lot of focus on earnings season, snapping that 3-quarter consecutive losing streak for earnings. So here we are, wrapping up earnings, but it's been by and large pretty nice to see the forward guidance really come in guide.
Absolutely. You know, we've seen some higher highs here and some higher lows overall in the market, and just a slow grind up.
And as we've seen the coronavirus, we have to talk about the coronavirus because that has really injected volatility in the S&P 500. As we've seen certain opportunities, if you remember, we were just buying a call spread. But this week, as we're seeing the market recover, went to historic highs once again this week, I want to be a seller of a call spread. So I'm looking at the end of month, selling the 34.25, 34.75 call spread in the E-mini S&P 500. This will allow an investor potentially, Scott, to collect $252.
Absolutely, and this call spread expires week 4 in February, so on February 28th. March futures in the underlying future contract here trading at 33.65 and at the money volatility, Jeff, the volatility is really hung in there. It's trading about 1072, which again gives you a little added extra premium to this spread.
Yes, and that's the thought process we go through here on Striking Options to understand where the market is, if it is historic highs, what's the at the money volatility, could you really help collect premium? Because sometimes, if it's not enough, we're going to buy that premium. So you have to understand where that at the money volatility is, Scott.
Absolutely.
All right, well, thanks as always for coming on Striking Options. We want to thank you for tuning in to Striking Options. Please tune in every week as we will continue to strike options.